All right, so welcome back. Hopefully lunch didn't blow by too fast. I had some project work I was trying to get done as well, but didn't seem to quite get done today. All right. Some people I'm adding.
I'm sorry, when can we do our slide reviews?
We've got couple little sessions I'm going to go through around product market fit, and then you'll get a chance to go through your slides today. If you have 10 slides, if you have 26 slides, I want you to postpone until tomorrow, winnow them down. Because really, I just want to get through everybody's 5-minute pitch and get you 5 minutes of feedback on the pitch. But if you have 28 slides, it's going to take you 20 minutes to get through it. And I'm not going to, I need to get through as many people today as we can, so we can get through as many people tomorrow as we can. So just know that's kind of the motivation. If I say no to you today, it's because I want to get through as many as possible. And frankly, if you have 28 slides, I need you to winnow them down. So 10 is fine. So, and usually I get the question, well, what about my build slides? And like, as long as they're 10 slides, I don't care like how you do the build. But if I'd rather have you come in today and tomorrow at 4 minutes and have time to talk more than have me cut you off halfway through your slides at 5 minutes. That's a problem. So keep in mind, they're gonna cut you off right at 5 minutes, and then they're gonna do Q&A. If you haven't got past your revenue model and answer to the questions, like that's not a good start. So, and for some of you, it will be a challenge. So, and I say that as a compassionate leader who's been exactly where you are. So, all right. Okay, I'm gonna hit share screen here and come back to that now that I think I can see that when people are coming in. Okay, so let's talk product market fit. What is product market fit? And we talked yesterday just in the introduction about that you have 2 epochs of your startup. There's the sprint to product market fit, and there's post product market fit. So post product market fit, you got to work on all kinds of new things, like how to scale your sales organization and how to write a compensation plan and how to run a board meeting that doesn't suck, right? So there's a bunch of things you need to do after you get to product market fit. How to build a great culture. We were talking, for some of you we're here as we were ramping in, and it's like culture is one of those things that ideally I want you to work on culture from day one. And if you're doing a services business, culture is fine, right? But if you're doing a product company, you really need to get product market fit, because short of product market fit, you don't have a company. So what I'm after with product market fit is you're trying to get to a point where I have some visibility into sales and forecasting revenue, right? I know that we finished this month at this revenue, and based on the data I have from this month, I know that next month we should be up 3%, 4%, 10%, whatever the number is. Versus right now, you're like, no idea. Don't have any revenue yet. We have a concept. Cool. It's a good place to start. As you move the direction of forecastable revenue, that's the positive version of product market fit. People pay for my product. We start getting customers that one of the aha moments you'll have after getting your first 10 customers is you'll get an 11th customer, and they'll be somebody you never talked to. You're like, I've never actually met this customer. You're like, that's a good sign of product market fit, right? They came as a referral. They came from somebody in your network, but you're like, no, I know early days, you're like, I know every one of my customers. And that's the way it is.
Dave,
totally okay.
Dave, so in your experience, product market fit is once we start getting customers that have, let's say, the referrals or word of mouth, or they're just coming from different directions, then we found product market fit.
It's the start of it. I'll give you there's a survey that you can use to define product market fit, or that actually defines product market fit. But the early version of it is you're starting to get customers that you've never seen before, right? So network effect, word of mouth. They didn't take a sales call. Like they just kind of like came in and you're like, I didn't even know them. Like those are good signs in the positive direction that you're going from where you are right now to some form of validation and product market fit.
And,
So
is there, so is it, let's say 150 and above active users, that's product market fit?
not really. It depends on if you're pivoting your product.
Or one.
So it really comes down to, again, it's a momentum. You'll see it as a momentum thing, right? Which is really, because if you have 8 different customers in 8 different market segments, adding a ninth and a ninth different market segment isn't product market fit, right? Or adding a 100th. I think as you start to grow, what you'll see is I can forecast revenue next month, right? That's a sign of product market fit. So like traction, it's a term you hear a lot in our industry in venture, but it's never well defined. So I want to give you guys some definitions to it. They're early signal, right, of product market fit. So pre-product market fit, I have some revenue, I have some customers. They may not look like my other customers. Like I'm trying to figure out where to double down on my advertising spend, right? So that I know how, like, what am I going to do in revenue next month? So as I look at that from a post-product market fit perspective, the mature state of it is I have scalable and predictable revenue. That's the mature state.
Okay.
Sorry, one of my screen dilemmas here is, there it is. There's my admit screen. So my post-product market fit is I have predictable and scalable revenue. I can start to forecast it. I have some cohort analysis like this. These customers are performing a little bit differently than those customers. And that'll happen for, especially all of you on the B2C side. It'll be like when we released a set of features, the customers kind of perform this way. We released a new set of features and the customer dynamic will change. And you'll start to do what's called cohort analysis at that point to kind of double down and look at like, oh, what did they do? What was the first thing they did on the site? Or what was the first tool they used? Or in your case, from a nutrition perspective, how did they engage with us, right? Is going to be an early indication of that cohort analysis. It's too early to do it now, but just know that's kind of what's on the horizon and coming. I have some sort of view into churn. Like it seems to be that these customers are leaving. I have them for this long. If I sold them a bundle of 3 months and they're not renewing, or like, hey, this group of people is renewing. So again, the early version of it is I've got signal that says I've got some momentum, right? So momentum is a funny thing in startups. You know when you have it and you know when you lose it, but you don't always know why you have it or why you lose it. And if you could forecast it, and a lot of it just comes down to your marketing is so variable, is that you did a trade show and then something happened, and then you did this and something happened. But if you're not tracking it very well, what's going to happen is it's going to feel very random. And you're like, what did we do? Or where did it go? Right? So that's why I encourage you to just like, you're really being systematic in how you're testing things is your goal. So you're moving past a hypothesis into data is kind of the direction you're moving. So product market fit originally, so Sean Ellis wrote about this, and so there's a link to his original blog post, Startup Marketing. And the question you're going to ask your customers when you start to do that cohort analysis is, how would you feel if, right? And this is the original, so it's a negative question ask around how would you feel if you could never use this product anymore? And very disappointed, right? Somewhat disappointed, not disappointed, or I no longer use the product, can't even remember it. If it's not greater than 40% would be very disappointed, the answer is you don't really have product market fit yet. So when you're bigger, you have somebody who can help you do this analysis and do the survey. But basically what you're trying to do is at the end of every month, you're going to go out and start to survey your customers around, hey, how would you feel if you didn't have this product anymore? And some people are going to be like, it'd be fine. Like, no big deal. Like, we'd just go back to Excel, or we'd go use our existing tools providers. We'd use our existing vendors. But some people are going to be like, oh my gosh, it would change my life. Like, that would be really bad. So that's a sign of stickiness and a sign of product market fit. Why does it matter? Right, the negative question. As an institutional investor, I'm going to call your customers. So we're going to go through a due diligence process. I'm going to talk to you about investment. This is, again, post the cohort, right? But you're like, I'm going to go raise $1 million or $2 million. Somebody's going to do due diligence on me. And I'm going to say, great, Hanar, can you give me a list of your top 10 customers? And I'm going to call those customers and I'm going to say, hey, by the way, how disappointed would you be if you didn't have to use this product anymore? And if people are like, it would be fine, right? Then I'm not going to be super enthusiastic about the investment. If of the 10 people you talk to who you've already curated, probably, right? They already love you, they're fans, right? And they're like, oh my gosh, my world would change if I couldn't use a product. I would be like, oh, I totally love this product, right? So, but what I'm looking for is social proof and validation. So some of you asked earlier, like, what if somebody says this about us? Like, it's social proof, right? I'm just looking for somebody who knows more about the market than I do, that's not you. Hopefully the customer is paying, that I can ask, hey, how would you feel if you lost this product? And if their answer is, oh, it'd be devastating and horrible and all those things, I'm gonna be like, love it. So, and again, this is like problems. You don't get to manufacture product market fit, you get to observe it. Early version is new customers, we didn't call on them, they came in from referrals, like, and we're starting to get revenue on a predictable basis. Like, I think next month our revenue is going to go up this way, and you can see it in advance. Like, those are moments of magic as a startup, because you're like, it's really working, right? Versus the first 10, you're like, hand-to-hand combat. I have to get every customer, I have to get them paid, right? All those things happen to be. It doesn't mean it's a bad business, right? But it means, like, is it going to scale disproportionately? So that's the start from a product market fit perspective. All right. You guys see my screen? It says my screen sharing is paused.
We can
Zoom share. Okay. All right. So that's the Sean Ellis test. So what you're tracking over time, again, you're back to churn, net negative churn I mentioned before, which is my annual contract value is going up on an annualized basis. I may look for customer satisfaction score or net promoter score. So if you're familiar with net promoter score, it ranks 0 to 10. You're looking for 9s and 10s. It's disproportionately high. So if you're a 7, you're neutral. If you're an 8, 9, or 10, you're positive. But so if you score it on a 0 to 10 basis and somebody comes in and they're like, we'd give you a 6 out of 10. Some people will look at it and go, that's amazing. A 6 is a negative. A 6 is a detractor. So you have to be an 8, 9, or 10 to be a positive. So it skews disproportionately high. And again, something you can do later. You don't need to do it now, but know that you're in your future. One of the things you're going to start tracking is customer satisfaction score or net promoter score relative to your customer base. And the reason you want to do that is you just want to know what's the trending before the churn. Like if somebody comes back and they're like, yeah, it's a 6, like it's pretty good. And you're like, oh, we want to figure out how do we get it to an 8? So when I ran Startup Weekend, we were doing about 400 and 500 events a year when I got there. And we were trying to do surveys, and surveys were super hard. And you couldn't do it Sunday night after the event because everybody was burnt out, and Monday morning was super bad. So we had to test what day we did the survey. And then ultimately we delivered the surveys in 8 different languages because we were global in 120 countries. Right. So, and when I got there, we were doing, our average net promoter score was 64. So it wasn't horrible, but it was still a negative. When I left, we were 91. Right. So we increased the number of people who, by changing the date that we did the survey, we increased the number of people who responded to the survey. So what we found on some of the early surveys was if we tested on the wrong day, you would only get people who were disproportionately negative. So we had to increase the total survey count. And then we also wanted to go out and say, well, and how did you score us? So for you all, what you're looking is you may do a 30-day post-use survey from a customer satisfaction perspective or net promoter score. Again, your methodology is totally up to you. What I'm after in advance of churn is if somebody gives me a negative score or it's not as positive as I think it should be, what I'm after is like, hey, how happy were you with this transaction? So if you're a marketplace, you know, the thing I hate about Amazon right now, one of the things is they send me a thing like, how did you like our product? But it comes like the day I get the product and the answer is, I don't know, I haven't used it yet. So if you're running a marketplace and you want to run a customer satisfaction score and say, how happy are you with this transaction? The question of timing is going to matter in that transaction. Have I had time to interact with the product or not? So if you're doing a subscription, it may be, hey, it's been 7 days since you signed up. Have you continued to use our product? Right? If you're running an app, the question of, I may send you an email every day for the first 3 days to remind you that you installed the app, but I'm going to tell you how to use the app. Hey, for day one, thanks for downloading our app. Here's what our customers find are the coolest thing about it, right? Really all I'm doing is reminding you you installed it. And if you continue to use it, that's what I'm after. So think about customer engagement, customer satisfaction as part of the early predictor of churn. The last thing you want to do is get to the end of a contract period and an annual contract and have a massive amount, 30, 40% customer churn, right? Because I'm going to look at that as an investor and go, yikes, that's a problem, right? Because my lifetime value, I need that lifetime value to extend past the 12-month mark. So usage level, growth level, time on site, engagement level, how much time people spend using the site are all early indicators. All right, traction. Traction is one of the phrases you can hear. Yeah.
Dave, just a quick question.
One more time.
Just a question. What do you think about push notifications versus what do you think about push notifications versus emails?
So you guys are in a totally different market. So it's not legal for us to do push notifications without double opt-in.
Okay.
So in your guys' market, you can, and it's totally acceptable and totally okay. And the question is in all forms of communication like this is how much is too much? So where have I given you permission? Where have I not given you permission? So what's funny in the US market, so like politicians have exempted themselves. So I can get push notifications because it's the election cycle on voting and donations and blah, 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 because they have a totally different legal standard than we have for commercial use. In commercial use, I have to have double opt-in, right? Did Dave give you explicit permission to send text messages to his mobile? Unless you're a politician, in which case they can spam the heck out of you, right? So just gauge it with a sense of like, what's my call to action? Because you should always think about this as a call to action, whether it's a customer service, an engagement, send you to a survey. So what's the process you use to engage them and how much is too much? Okay. It also works in your guys' market for sales. With here, it would never work for sales, which is just crazy.
Thank you.
Okay, so what's traction? From an investable perspective, you'll see there's a lot of overlap with product market fit. It's forecastable, it's predictable. Traction is basically when you hear a VC say, hey, when you have traction, let me know. That usually means you have something you don't have yet, but I, as the VC, haven't defined it for you. So, and it tends to be a catch-all for like, oh, whatever it is, you're not there yet. So what you want to do is ask the question to the investor and say, well, what type of traction would, like in your mind, what's the most important type of traction? Is it customer growth? Is it customer engagement? Is it sales, the number of new customers? Is it time on site, right? The number of downloads? Just ask, right? Because different investors will have different views of what it means. But you want to get to that number as quickly as you can. So you're like, okay, so when I get to this number of users, I should come back and talk to you, right? Totally fair question. And most investors will go, yeah, that kind of makes sense. The challenge the investor has is you look at so many deals that it's hard to give useful feedback across the board to all of them. It's just difficult to do. And human nature is such that you don't want to look like an idiot, right? So you want to give articulate feedback when you can. So that means that investors don't give much feedback at all, right? So sadly. So I'm gonna look at sales cycle, right? That's a good early sign of traction. And then, so keep in mind that you have your strategy and your tactics that you're gonna use. And then ultimately tools will follow that. And what I mean by that is that spending time putting in customer relationship management software isn't a leading indicator of traction. Like it's like doing financial models. It'll suck a huge amount of time, but it may not be an early indication of traction. Like a Google Sheet for most of you is fine right now. So do you need a complex sales process? No, right? Do you need marketing funnels and tracking? Probably not, right? Other than the basic one that I sent you, it's like, that's probably okay to start. If you're a VP of marketing by history and you can do this super fast, the answer is rockin', do it. But if it takes you a bunch of time and you have to spend time ramping up and learning a new tool, don't do that. From a customer acquisition hypothesis perspective, we talked about this earlier about your assumptions, but you should have a CAC number. Does anybody today have a CAC number? Oh, awesome. Great. So what's, Mohammed, what's your guys' CAC on the seller side? Sorry, you're on mute.
It's $250.
Okay. And on the buyer side?
On the buyer side, at the moment, we just expensed it as a marketing expense.
Okay. So you haven't tracked it down to a buyer side yet?
It's around like $30, you can say, but we have a different viral marketing tactic, which actually brings it down to less than that. But that's like you're asking for some secret sauce right now.
No worries. What I'm after from the big picture perspective is going into your interview, you should have a hypothesis, right? But if you have data, even better, right? But again, as you get into the program for Flat6, as you come out of the program 90 days later, you're actually going to have data. So, and you're always looking for, from a marketing standpoint, to Mohammed's point, you're always looking for a viral hook. You're always looking for like, what's our marketing angle? Marketing is just a creative process, and you're always coming up with something new. And there's no like, oh, I dial these things in and there's a right formula to it. I wish there was for you. Like if I could figure that one out, it'd be a killer product, but I haven't found one yet. And markets are different and products are different. So, so LTV in a mature state, it's for some of you wondering, you can calculate 36 months in a mature state or based on actual data, but early stage is the 12. Your time to close, we talked about, and your churn and retention. By the way, word of mouth versus virality, the thing you want to do to track that is you need a referral code, a landing page. So you're going to do a lot of landing pages in the early days. So using a tool like Unbounce or something similar, there's a bunch of free or super cheap tools, but you want to send people to landing pages, not to your main pages, so that all of your marketing activities will send people to a landing page. One of your other options there is to use what's called a squeeze page. And a squeeze page has no other navigation. It's just a page that's conversion. So if you think about the Amazon checkout page, when you get to the Amazon checkout page, there's no other navigation. It's like, there's only one path. And it's like, I can hit the back arrow on my browser, but a squeeze page is designed to get me to convert. So if you're buying ad traffic and you're trying to get people to download your app, you want to send them to a page that the only option is to download your app, not read your blog, not go back to the top level navigation. Like you can force them to have to type in your URL again. But the idea of a landing page is a squeeze page pushes you in the direction of conversion. So, and you're going to do a lot of testing. If you don't test it that way, you end up with all the traffic at your main site and you don't know where it came from, and you don't know which traffic you paid for, and you don't know which traffic came organically. So just know that you're going to be doing a bunch of testing, and you just have to get used to doing marketing testing. It's just kind of the nature of the game that you're going to be playing.
Dave.
Yep.
Just quick question on the customer acquisition cost. How do we estimate this number if we don't have it? How do we come up with this number?
It's a great question. The answer early days is it's a guess, right? So to my point, it's like, we think it's $250 and you're like, meh, okay, right? But until you start tracking what you're spending on, and that tracking turns into traffic and traffic turns into leads, you don't really know, right? So there's a forced multiplier, right? So in business to business, your LTV to CAC ratio should be greater than 5 or trending greater than 5, because in a B2B sense, your average transaction value should be higher, right? So I'm willing to spend $100 to get a customer because that customer should have a 5-to-1 ratio on revenue. Now, if my margins aren't good, I still have a problem, right? But at least I'm trying to fix one variable of my multi-variables here, right? So the first one is on B2B, it should be greater than 5. On B2C, it should be greater than 10. You should be able to trend greater than 10. So I should be able to spend $100 to get a $1,000 customer or $10 to get a $100 customer, right? Again, heuristics if you're not there yet, but you have two big unknowns for most of you right now, right? I have the cost of building the product, which could be $50,000, could be $500,000. Then I have the cost of selling the product. If I'm inverted on cost of selling right now, then my cost of delivering that product better be cheaper. If my cost of delivering the product is super high, then I need to get my cost of selling the product down. And you're always working to lower those numbers in general anyway, right?
All right.
So if you don't have any data, what you're going to go do is take that budget of $1,000 a month, figure out where you're going to spend it, track your leads, and then after 30 days, you're going to be like, yeah, it's $84, right? And it's not based on a lot of data early, but then the next month it'll be like, oh no, it's $94. But now I have twice as much data in the data set. I know how to track it. So, and that's coming out of the program. That's going to be your objective.
We can't use public companies, like if you know public companies, and take the marketing cost, number of users, and come up with that number.
No, because they're at scale. And at launch, you're disproportionately spending at launch versus at scale. They have existing revenue, they have existing product, and they have, most importantly in their world, brand, right? So they already have traffic. You're starting from zero you're not going to build brand because you don't have $100 million to build brand, but you're trying to drive traffic. That's why the comment yesterday about have one product name or one company name rather than two. If they have to spend twice as much money to find my product, right, versus find the company name. So when you get there from a traction perspective, you're starting to see those things like product market fit of like, okay, things are starting to, I can see where I spend money here and I get money there. So ROAS is the one that I mentioned earlier, is return on advertising spend. ROAS is pretty universal across all of the revenue models, right? Which is if I spend $1,000 now, I'll get $1,000 back in 87 days, 37 days. Like I can predict my return on advertising spend. That's the mature version. But it should be one of your goals anyway, right? You should be able to look at it and go, I have a goal of figuring out what my ROAS is.
Okay, thank you.
Dave, I have one question, please.
Yeah.
When we calculate our CAC, do we have to factor in, for example, the designer's salary to create the ad that we used on social media, let's say, on Facebook or?
Yeah,
So
I mean,
you do factor that in.
You're after your
everything.
fully burdened cost of sale, right?
Yeah.
So for example, the designer's time spent on designing the product, that's in your cost of goods. The time spent doing the designer to do the advertisement, that's in your cost of sale. Your time spent doing sales calls, cost of sale, even if you're not paying yourself, right? Which is a topic we'll take on here before we go to your slides. Let's say 20% of your time is spent doing sales calls, and at market you would be worth X number of dollars, right? So I have to assign a value because otherwise I'm creating a fictitiously low cost, right? And I want to know predictably, like, what's my CAC? If I don't do fully burdened cost in that, it's going to be wrong, and you want to get it as close to actual as possible, right? So, which brings up a topic that came up before all of you got back on, which was, when do I pay myself as a startup founder? Which is a great question Hanar asked. So, and the answer is as a VC, I want you to pay yourself. I just don't want you to pay yourself market rate yet. So as you get in further lines of funding, like, I want you to pay yourself because you need to get paid, like, and it's fair and it's reasonable to expect it. Angels in the early days, with the stage that you all are at right now, is you're mostly putting money into the company, either directly in the form of you're capitalizing it and paying the expenses, or you're not taking a salary, you're foregoing a salary. Now, just to be clear on a couple points, you're not going to get paid back accrued salary you haven't been paid. So if you're hoping for that, let me quash that dream right now. Sorry, but you're not going to get paid for accrued salary you haven't been paid. Think of that as your invested capital into the company. So it's one of those things that investors want to pay for your future, not for your past. So if you're accruing debt right now, like investors are like, I want you to take care of the debt first because I want to pay for your plan going forward. I don't want to pay for your plan going back. So especially if it's just accrued founder salary. So yeah, then your early rounds of funding, angel investors and such, you may be at 50% of market for early stage company CEOs. You're not 50% of market for public company CEOs. And then as you get further up in your rounds of funding, you'll get closer to market. By an A round, Series A, you should be kind of at market funding. And the reason is because you've taken equity. So hopefully you have 51%, right? At least from the conversation the other day. Maybe you have 80% of the company. And the idea is that pie is getting bigger, right? But you're not, you can't spend it. So we want you to be paid from a VC perspective. Every VC is going to be different, just so you know. But from an institutional perspective, I want you to get paid because I want you to be focused, right? Versus like, oh, I have a day job. My commitment as an investor follows your commitment as a founder. So if you have not left your day job yet, or your co-founders have not left their day job yet, don't look for me to write a check. Like I'm going to follow your commitment. I'm not going to lead your commitment. So I'm not going to write you a check so you can leave your day job. I'm going to be like, let me know when you leave your day job. And then if that's the case, then my commitment will follow, right? Like I don't think Flat6 takes anybody who's not full-time on their company. It would surprise me, right? Unless you're, like I think I saw one in the past that they were doing online doctors and one of the co-founders was a doctor, but he wasn't the CEO. So yeah, my commitment as an investor just trails yours. It does not lead yours. Okay.
So Dave, you think we should get a salary? Like, so at, let's say, seed round, we should expect a salary from our VC round. We should factor that into our financial model, I mean.
Yeah, when you do your financial model, I would probably put your salary in at 50% of what market is, and then use that as a way
seed round.
Whether you get pushback from the investors or not.
Dave, but in the case of not having, you want to expedite the process of launching and the marketing. So basically, if you're funding it yourself, you do need your data job to actually run the company and ensure expediting the process of it picking up in the market prior
Welcome to the catch-22. Yeah, I mean, just investors are going to look for you to build. So my suggestion, and just where you're at, right, is this is a side hustle. You're using your funding from your day job to fund this deal. Go get your LTV and CAC ratio, figure out your marketing spend and how you're going to acquire customers. Because that way, when you leave your day job, you're leaving it based on data. You're not leaving it based on a hunch. But I wouldn't expect, like, if you got asked at the end of your pitch, if you'd already jumped in to do this full time for Flat6, if your answer is no, I wouldn't expect to get into the program. Because of the 20 companies that are on here, at least 10 of them are already.
But what if you continuously fund it? So basically, as a pre-seed funding, it may not be like what I'm wondering, that me funding it myself would probably be able to sustain it longer than the funding raised by a pre-seed funding. I'll be able to expedite the process of launching it, ensuring that it's up there in the market and its valuation is even higher than what the valuation is given.
Yeah, which means you have to sell less equity in your company to get further along.
Yeah.
So it just depends. That it really comes down to your circumstances, right? I mean, I've left early. I've funded the company through the Series Seed myself. Like right now, if I was to start a new company, I wouldn't take an outside investor until it was a late Series Seed deal, right? I'd want the valuation to be much higher, so I'd have to sell less of the company, right? Because I want to keep as much of the company as possible. So, but keep in mind, a couple of factors. It depends on your individual circumstance, but just know that investors aren't going to, they're not going to give you the runway so you can leave your day job. They're going to look for you to leave your day job as a commitment before they fund it. And then there's this heuristic model that Dave Burkus came up with a few years ago. It's called the Burkus method. It's about 20 years old now. Dave was an angel investor from Los Angeles. He basically came up with a heuristic that says, oh, you got an experienced team that's kind of worth $350,000 to $500,000. Oh, you've got a big market. That's kind of worth $500,000 to $750,000. Oh, you have a product. Oh, the product's super sticky. That's worth $500,000 to $750,000. So there's this kind of.
Do you believe in that method? Do you believe in are you with the Burkus method?
That's the only method that people use.
Yeah, that's right. That's what I've been told. I've heard that before as well.
By the way, I like Dave a lot. Like I've been a lurker on Dave as a fanboy of Dave for a long time. And he wrote a blurb for my book, which is super awesome. But yeah, I mean, ultimately they all the methodology for this tracks back to the Burkus. It's Berkus, in case anybody's curious. But the Burkus method is the way all this tracks back. Is it right? It's got 20 years of history with it now, but, and then you guys have a discount for Bahrain and MENA versus a premium for San Francisco, right? So you basically have this market adjustment that basically says, yeah, the math is kind of like this. And by the way, investors are driven by their average check. Like when I invested for the fund, we wanted 10 to 20% of the round of the company when we invested. But our average check was $500,000. So that tells you exactly what my average investment is, right? The stage I focus on. So if I want 20% for $500,000, right? I'm going to do a $2.5 million deal with a $3 million post money value. So 2.5 pre-money, 3 million post money. If I'm a big fund, I still want 20%, but my average check is $5 million. So I'm driven as much by but I have objectives, right? My objective is I want to get in at 20% of the company and I want to keep the 20% and invest more as you grow. That's the investor's incentive.
Okay, from what I hear is that you have the mentality that I'll only get into, you don't look into the investment as a desperate investment for cash, but you look at it as an investment opportunity. I want to know, like from an accelerator point of view, do they look at the startups from their desperate for cash point of view, so they're going to be willing to take such risk, or they're looking at it that it's an investment opportunity that we can go ahead with because we know that we're going to get our return in the future? Because this will change the perception or the way you pitch. Because from my point of view, like in my case, for example, I can say it now that I'm certain I'm not going to let go of my job, because I know that even if I let go of my job, knowing 100% sure that my company could fund itself, it's just that I know I could expedite the process. I could have a wider range or wider access to more markets by me adding some funds from my personal pocket.
Right.
So it's from that point of view, how do we pitch it, or how do I bring it? Because it's just an opportunity where you want to be fair to your business, but at the same time, you want to be fair to yourself.
Yeah, no, again, personal circumstances. So I don't think, if I'm the accelerator, what I'm looking for is 8 to 10 of the 20 companies here are going to get in, right? I'm going to take a flyer on a couple. Like maybe that's right, maybe that's wrong, right? There's going to be somewhere you're like pretty predictable. I'm like, I think this one's going to make money, but it may not make a lot of money. So as an investor, it's kind of portfolio theory and portfolio management. Right. I tend to invest in stuff that I like based on the profile of the company. It's like, oh, you're a marketplace. I like marketplaces. Like, because if you get scale, they're super hard to compete with, right? Or I don't like marketplaces because they're hard to get launched. Or I like the staffing business, or I like the gold business. Like you tend to look at stuff and go, so it's not a question of are you desperate for cash or not desperate for cash in my negotiation. It's more a question of like, do I like the deal and will it return for the fund? So, because again, my investment thesis is going to be like some of the deals I write checks to are just going to vaporize and go away. And by the way, on that note, you guys should know, like, I expect some of you as in a portfolio to fail. When you fail, you shouldn't disappear. It's not like I don't like you, right? Or I'm a big boy. I understand what I was investing in, and like some percentage of my investments are going to fail. right? But a lot of founders disappear because they're like, oh my gosh, Dave's going to be mad at me. No, quite the contrary. I'm like, I know the math, right? The math is that like a high percentage of you guys are going to fail. So I want to make it as easy for you to, like, I want you to learn from that failure and then come back to the accelerator, to come back to the fund with your next idea and say, hey, I know I didn't make you money on the first one, but I think this is a great idea and I'd love to have you as an investor in this one, right? That experience was maybe expensive for me, but I have the chance to earn money back from that experience too, because I'm investing in you, right? So, but ultimately I don't own a percentage of you, I just bought a percentage of the company. I want to highlight that because it's important to know that, like, from the investor perspective, like friends and family is different. Like it makes holidays super awkward if you lose their money. From an institutional investor and angel investor perspective, it's just math. Some of them are going to work, some of them aren't, right? So depending on where you are on your circumstances, that's really the question, right? Do you need the money to make this work? They invest super early. Like if it's a good idea, they like the team, they'll take a flyer and go like, you know, you need to get the product in 90 days, right? Or you need to get product in 30, 60 days. This is all about you setting expectations of, with the capital they're giving you, what are you going to go do? Are you going to test that? At very least, I want you to test your marketing thesis. So the good news about testing marketing spend is I can send people to a landing page and let them know they're signing up for I'm going to market the scarcity. So in the Robinhood example, right, is I can sign you up for a list like, we're not licensed to do business in Kuwait yet, but you should sign up. And as soon as we're licensed, we'll put you on, right? So I can bring you everything to call to action except asking you for money. I can sign you up for an email list. I can sign you up for a wait list. I can get you to pre-order the product. I can do everything but take cash. And I would test that marketing spend in advance. And for me, I'd rather spend $10,000 on testing advertising than spend $10,000 on development, because I know that I'm going to learn through that $10,000 on advertising, like what message works, who's going to buy, and why are they buying, right? So that's just me, right? But I've done it the other way too, where I've spent tons of money on building a product and then got it out there and found out people didn't actually like it. So that one's a bit problematic, right? Okay. Any more questions on this topic, just traction, product market fit? Because I want to transition to for those of you who have slides, go over them now, give you a chance for feedback, and then get you through today's deliverables, or just really working on, like, we're down to slides, and I want you to get ready for delivering those slides tomorrow. So any other questions before we go to slides?
I have a controversial question.
Go for it.
If you had just $10,000 and you had an option to either test a product or build it, like test the market to validate a product before even building it, or build the product with an intelligent hypothesis, what would you do with your $10,000?
I'd spend $20,000 on testing.
Okay, all right.
You can disagree, it's fine. I'm just saying, for me, knowing what I know at this point, just because I've wasted so much money building product that wasn't the product somebody wanted, and I've wasted it on a hunch. Like I know that spending $10,000 on testing, I know I'm going to speed my development cycle by 50%.
The whole fail fast, fail quick, right?
Right. I'm a big fan of kill bad ideas fast. Like failing fast is painful. Like so I failed too. And failing is like, that's hard, but I'd rather kill a bad idea fast. So for me, the outcome, Mohammed, of it is, if I spent $10,000 on testing, the product I build would be 50% more efficient, right? Just because I know what I'm building. I know the features that get people hooked, right? So I just know that it is trajectory, right? It's all about, like, what's the momentum that I'm using. So for me, that's the way I would do it. You all have to decide for you. I have 5 data points, right? That's all I have.
Yeah, but like what I mean by that, because look, I agree with you. I agree with you on this point.
But
like Abe Lincoln said, you gotta shave the axe. If I had 9 hours to chop a tree, I'd take 6 hours to shave the axe.
Yep.
I got that, but sharpen the axe. But what I can say is, if I had $10,000, I can actually test it. There are so many free ways to test an app or to test a product where there's actually not so much to actually, except if you are a coder, right?
Mm-hmm.
So that's, I mean, you got to be resourceful.
Yeah,
That's
you
all.
use the tools that I mean, just to the point of the person that's like, I'm not going to leave my day job. Use the tools that you have, right, to go test it. So building product to me isn't a challenge. Scoping the product is the challenge, right?
Mm-hmm.
So for me, it's about like, am I sure I'm building the product people want, right? So for me, that's the way I would approach it. But like I said, it's a data point of 5 startups. After 5 startups, some self-funded, some outside funded, right? It's what you're after in this process is there's a bunch of things I can help you with, like what you do and how you do it. Like I can't fix your why. You all know your why, right?
Yeah.
You internal motivations, external motivations, knowledge of the market, all your whys are across the board. I can just focus you on what you need to do and how you need to do it. Time to launch is critical because it equates to resources and cash. So time to revenue, time to launch, A/B testing the crap out of stuff, like all of that. So if you can take this what would be a 12-month process and do it in 6 months, then I'm all about how do you align your resources for that? Like you don't have to leave your day job to do that, right? As long as you prioritize the stuff, you're like, okay, here's what I figured out. I'm going to prioritize my resources this way. If you're an engineer and a coder, you will default to what you know, which is to go sit down and write the code to build something. I just think I want to know, like I want to compress like exactly what I need to build. And I do that based on data. So that's kind of my predisposition. So, and you have to exchange the word but for and, because if you put the word but in, it means that everything I just told you isn't true. And I'm going to completely disagree with you, which is fine too.
I totally agree with you. I totally agree with you.
It's all good, right?
So,
all right.
One last question, please.
Go for it.
Okay. Other than the Lean Startup, what book or document or article or that can you point us out to that could help us with this? I like the concept of LAM, launch addressable market, but something to get all of these like options of testing. Like you can use, you try these metrics. You know what I mean? So what can you recommend as a document that would fast track us through understanding all these concepts?
It comes out in March is when the publisher releases it. So, because everything I've written in the book is, because to your point, Lean Startup is great if you have 1,000 users a month or 1,000 users a day. If you don't have 1,000 users a day, the answer is, I don't know how to back up into it. So I've got a long list of resources that I've published with each of the chapters. I'll send you guys all those, because the reason I'll do it that way is that each of you has different needs relative to your current experience and skill set. So if you need to dig deep into a particular topic, so I've got a long list of, so I'm an avid reader. So I came off of a challenge a few years ago to read 100 books a year. I don't have a lot of hobbies, right? I have 4 kids and I read 100 books a year. So, and I cycle, that's it. I don't play golf. There's a whole bunch of things I don't do. And I do startups.
Early adopter. If you need an early adopter for your book, just tell me we order it. And
we can work that out. Yeah, it's totally okay.
Sounds good.
Yeah, you just want to go through the mechanics of like, here's the things I want to test and here's the things I want to learn. I'll send you all a link for that. I do have it in PDF. I'm happy to share it out with you if you guys are interested. So, okay.
There's the book, Building Products That People Love.
Mm-hmm.
I think that's the title of the book. There's the other one that's it's sort of like I forgot what's it called, Sticky Habits, Sticky Products.
There's also one called Talking to People, which is all about customer development. So depending on the stage that you're in, whether you're trying to figure out the concept or whether you're trying to figure out the product, yeah, there's a bunch of different books in there. And I'm happy to give you my list, because it really comes down to which piece of the chapter you're working on. Like if you already have a product and you're working on growth hacks and marketing, that's a super creative one. And there's all kinds of materials. They're not all applicable. the sales process is pretty predictable because there's only really 4 options, right? But yeah, so happy to share out all the resources I have, but to your guys' point, it's like, it's all about, you have limited resources and limited time right now. Where are you going to apply that? Number one, to get into the program. And then while you're in the program, what is it you want to learn in that 90 days? So one of the things you're going to have to learn before demo day is, does anybody care? Is anybody looking for the product? Where do I find information about those customers? And what am I going to spend from a marketing standpoint? For some of you, the concept of spending $1,000 on marketing right now, you're like, I don't know where, I don't know where to get $1,000 to spend on it, B, I don't know where I'd spend it. No worries. Like, I'm trying to push you uncomfortably in a direction that says, what can you take action on this next 30 days to figure that out? But if you don't start with your value proposition first, like, you'll miss it. You can misspend. Like, Google AdWords is super great as long as you understand negative words. But one thing about Google AdWords is it's always good for Google, and it's occasionally good for you, right? But I burned a lot of money on Google AdWords because I didn't understand negative words, how the process worked. I learned a lot, right? But you don't have to spend $1,000 to learn that. Like, there's some great online courses for it. Okay. All right. So who has a 10 slide or less deck? All right. Steve does. So Steve, you're first. You can hit the share. You can hit the share button.
Yeah, I worked on the presentation. I haven't realigned my narrative to the slides, but I'm going to attempt that as I go through.
No worries. All of this is an attempt. That's all we got.
Yeah, that's fair. Can you see my screen?
Yep. I'm just going to set my timer real quick. All right. All right, ready when you are. Okay.
Absolute Collateral is a B2B capital markets trading platform to unlock local and international collateral globally. The problem I faced in my daily work was that this type of trading is done like via phone, via email, and some clients even do fax. And it's mostly limited to just banks trading. Everyone has to go via a bank. And those banks tend to only offer a limited set of collateral. What this leads to is it's a slow and efficient market because of the way it's traded. Collateral then becomes locked because you have to go via one central point, and you don't get access to all the collateral. I'll change that spelling mistake. So the solution we're doing is we want to create an electronic platform to increase the transparency. And this will hopefully increase liquidity because more collateral can move around, because we're going to allow all clients to trade with each other. And because we're doing local and international collateral, we'll have new data sets that can be used. This is the slide I'm going to work on, but I didn't want to look at the size of the collateral market because it wasn't too interesting. I was more interested in the revenue these type of markets make. So I looked at Oliver Wyman report, and they created a market infrastructure report. So the size of the market is 56 billion in terms of execution platforms, the data we can have from the platforms, and some tech solutions around that. So that's how I see the size of this market. So who are our clients? Our clients, this is a B2B platform. So it'll be banks, investment banks, development banks, sovereign wealth funds, the buy-side counterparties, asset management insurance companies, as well as corporates. And the role within them tend to be traders, treasury departments, portfolio managers. And the way I'm going to develop my client base is through the capital market associations where clients join, where the actual collateral is settled, because that way I know who's doing what, as well as pre-trade and post-trade execution, because that's not my core area, but I can work with them to increase my client base. And the timing is really good because of the increased regulation around this topic, as well as COVID cash pressures. More people need cash. So this leads to a higher demand for collateral, including cash, as well as higher demand for new types of trading counterparties. Here is a competitor analysis. There aren't really any competitor who is looking at all types of finance institutions across multiple types of collateral. Most just focus on, say, international collateral, and those that do work on that tend to focus on one type of settlement area, but I want to open up the whole market to all clients and local and international collateral. So I'm really lucky. I've got some traction in Bahrain. I've had approval from the central bank for banks to trade via my platform. And I've got 4 banks looking to sign my trading docs. One has just given me a markup. So I'm hoping to get that signed in the next few weeks, with my first trade happening next month. And here is my revenue model. I'm going to have a subscription model. So it's actually a yearly fee people pay. And then once you join the platform, I'm charging per trade, just a flat fee. And as more clients trade, I can then generate data, and I can sell APIs and data sets. The sales cycle tends to be about 3 months. It takes about 1 or 2 months to look at the trading service agreement to sign, then 2 weeks to onboard. Because it's an execution platform, cloud-based, it's not too long. Do a test trade, and then they're good to go. My roadmap is I'm focusing on the Sukuk collateral and US dollar and euros versus 1 or 2 ways this is traded. And then the region I'm focusing on is the Gulf region. And in the next 6 to 12 months, adding more products and adding different regions with some functionality. My uniqueness, I feel I'm open to all types of financial institutions, not just banks. I'm helping clients to create a harmonized legal doc so it simplifies the access, and new data sets that people can use to pricing and valuation. That's quite important. Here's a team. We've worked together 10 years ago, and we've known each other for 10 years. So there's me, CEO, and there's my CTO. So yeah, we've got a really good background in capital markets and building trading platforms. What I want from Flat6 Labs is help with sourcing local employees, client access in Bahrain and GCC, as well as investment to grow, develop, and scale absolute collateral. And that is me.
Awesome. Hey, so when somebody asks, what's a good design look like? This is an example. So thanks for.
I've worked months on this. I mean, it's like each slide takes like a day sometimes.
So thanks for leading off in a good example. So, and you're right at 5 minutes already. So like, dude, like, sorry for the other people who are coming after you, but time well spent on the investments. So a couple things. Go back to your slides here real quick for me.
Please write it down, yeah.
So there's a few things I'd like you to get to the top of your story.
Thank you.
So implied in what you're doing is that by saving time, they'll make more money. But I want you to tell part of that story arc, Steve, earlier, which is today, these types of investment take, 3 days, 3 weeks, 3 months to clear. And by moving it to electronic, we can move it to hours or days. Like I'm looking for, you understand implicitly what's in that, but your audience won't. Yeah. So what I want you to make explicit, and this is true for everybody, take something that is implied and make it explicit. Like by doing this, we're making cash available faster on average transaction values of $2 million or $3 million. Like put something to it where I'm like, oh, well, that's super meaningful. Like, what it is, but I want you to state it explicitly.
Thank you.
The fact that you have 3 banks in process of signing already, tease that out early in your first slide. And by the way, since we launched, we've already got 3 banks who are getting ready to sign. Tell me about it later, but tease me about it up front. So I'm like, oh, I'm going to lean in and go, oh, okay, well, tell me more.
When do you think I should say that?
What's that?
When do you think I should tease them, man? At what point?
I'd be like slide 2, like all the way up in the front. Okay, so your revenues and fees slide is super busy. So for everybody, this is a good example of where data exists. It's easier to make up the slide around what your TAM is, but that TAM takes into the total dollar amount of the trade. I'd rather have you say the average fee is 50 bips or whatever it is, and take that TAM down to like, I only really care about the fee amount. I don't care about the total dollar amount. Because your TAM is not the entire market with all of the fees. Your TAM is just the transaction fees. So bring your TAM down to that.
Yeah.
So, and that one happens a bunch, by the way. That's not an unusual one.
This is my worst slide. I need to improve on that one.
Yeah, and it's super busy.
Yeah.
Well, there's one that's busier. The ones with the arrows on it is too busy.
Which one? This one.
Your first customer slide, I think. No, you've got your.
This one.
Sorry, I'm back. Let me pull it up here real quick. I don't see your screen. I just see everybody's screen.
Let me share. One sec.
There you go. That one. Yeah, that one's super busy. So I'd rather, so what this one leaves me wondering is like, who's your first, like, I like the slide and it works from the standpoint of this is the market and it's super hard, but I'd like one arrow or one highlight to say, I'm launching with this. And the reason is I get customer control. I get to take my part of the economics, like narrow me into like which thing on this slide you're going to do.
It's basically, yeah, I can get rid of I can talk about just about banks to start with. That's where I'm really starting.
Yep. So what I'm after with this slide to tell your story arc is this is the current state of the market. It's super hard and it's confusing. And because there's so many people involved, that's why it takes so long for these things to clear. And by automating all this stuff, this is where we're going to make 50 bips on it versus somebody else.
I want that slide. Okay.
And then we're starting here and then we can go to the whole thing because it's implied. So it also answers kind of my, of all of these things, who's your first customer? And then you got to it in the fact that the banks are getting ready to sign, but by teasing traction up at the front, then I'm like, I see. Oh yeah. First customers are banks, right? And then you can tell me about the banks next or later. Yeah. And then how you make money is a little deep in the slide deck. So I'd like to, I'm okay with, I guess where it is, but like be a little bit more explicit about like how much money you're going to make. Is it a transaction fee? Is it a subscription fee?
I've got that. I just didn't think I needed to go into it this time, but if you're saying I should, then I will.
So this is one of those things that if you have the data, like tell me about it. If the answer is we don't know yet, that's okay. But again, this is a competition, right? There's 20 companies, 8 to 10 are going to get in. If you have even early data, tell me what it is. You're like, it's not conclusive, right? It's not going to be where you end up, but at least it's a place to start. So, but yeah, I mean, your pace is really good. You're clearly comfortable with the space. Like all those things are great.
I think I can take some stuff off, like roadmap. Even though it's useful, I can speak that rather than say it.
Yep.
Bye-bye. Okay. So I'm going to just change the product roadmap and have my fee, how I'm making the money, because I've got all that granular information.
Yeah, and I think just getting it out there, like, so what do you think you're going to charge for a transaction? Is it a transaction fee and a subscription, or is it 25 bips? Or
subscription fee is like 10,000 a year, then a flat rate of just $100 per trade, just to get more traction. Then as you get more volume, I'm then just doing basis points per trade, but not at the start.
And then the only other piece that's missing is what the average trade amount's going to be. Is it $2,000 or $50,000 or?
I've put that in my revenue model, so I'll put that in a box down in here as well. Great.
Yeah, those would be the changes I'd make. And other than that, like, woohoo! Way to kick us.
Thank you. Appreciate it.
Yeah, awesome. Anybody else have any feedback for Steve?
No, you knocked it out the park.
Yeah, really good.
I mean, I've lost hours doing this, but I appreciate it.
Well, yeah, exactly. No one sees how much time you spent to this point to get to that one. Who did the design work?
So I went online. I did buy keynotes presentations. I think I picked the first one. They had about 100 or maybe 200 to choose from. I always like minimal stuff, so I typed minimal layout. I looked at a few, picked one, and just took it. So I think I paid maybe £20 for it.
Yeah, templates are really good for that.
Brilliant, right? And so again, versus starting with a PowerPoint template, which is super ugly, like buy some that are crisp. I'll make sure, by the way, I have a link to Crunchbase that has, Uber's pitch and Airbnb's. It's like 15 pitches that were unicorns. They're kind of
That'll be-
funny in retrospect, right? Because you like at the Uber picture, you're like, oh, that was actually kind of cute. But getting a template you can work from is way easier. So
So much.
awesome. Okay, who's going to go next?
I think I will.
Okay.
Yeah, Steve, thanks for queuing it up.
And by the way, I know
I'll
two of
do
you are
it
kind
just-
of quasi competitors. I'm happy to do those ones solo afterwards, not a problem.
Yeah.
But just wanted to throw that in there as well.
All right. Yeah. So I'm volunteering because I really want just critique, like really good critique. So may you please allow me to share?
Yep. Just hit the share button. You're already approved.
Share.
Only one person can share at a time, but other than that, it's pretty open.
Okay. It just says that share screen, desktop. I don't know why it's not. I'll go after. It says allow Zoom to share your screen. So let me just do it. Let someone else do it. Let me just change the preferences.
Okay.
Someone else can.
I can go next. Steve, Dave.
Go ahead.
Can I go next?
Yeah, sure. I just mine is very, very like it's a draft. But can I just go ahead just to like 5 minutes just to quickly run through it later? Is that okay?
So we have time tomorrow and the next day. So if you're not at 10 slides right now, I'd say push off till tomorrow.
No, I'm at 10 slides, but I just want to see like, okay, but it's a basic draft and okay.
And then Ahmed, I saw you hit the raise hand button. You're the only one that does that. I love that about you. Thanks.
Well,
I'm not gonna.
It's possible.
Yeah, go for it.
Okay, cool. So I'm sharing.
Nora will get her slides together and you can go now.
Can I go next?
Yeah, you can go next. Okay, Ahmed?
Do you see my screen?
Yep, you're good.
Okay. Well, this is Ahmed and we are Recommend. Actually, I did start from the middle of it. I'm sorry.
Yeah.
So Recommend is a tool for eShop and marketplace to change the experience of reviewing, because reviewing is really an important step in any purchase. So to know how reviewing works and how Recommend can change it from text to a video. So the problem of shopping online or getting a product online is always to see what other people are saying about that product. And for that, there is a lot of problem. Which of them is the fake reviews that they are really invading any platform of eShop? Another thing, some of the comments or some of the reviews are super long, which make people a little bit lazy to read them all. And text review doesn't have really any emotional feedback that could give. So the solution that we had is actually a short video format as a review, or to make it simple, as a story. I know everyone have Instagram right now, Facebook, and those features are existing even in other platforms like LinkedIn. So why not in our marketplaces, which will bring a lot of trust brand about the product, of course, make the customer more convenient to buy it, and make a category of way of buying things, like injecting the concept of gamification, how to leave a nice funny review, or a review that can reflect your disappointment. The value proposition that we offer also, that this plugin is super easy to integrate to your existing websites, and it will make the experience more engaging with better user experience. Also, the concept is already known. Like now, youth are using this kind of feature for other things, and why not implement it to our marketplace? The market size. As we can know, there is a lot of e-shopping trending since years right now. And with the pandemic that we have already, I think everyone was trapped, and we were like forced or kind of have no other choice than using e-shoppings to get what we need. There is like more than 500,000 stores with PrestaShop, 1 million on Shopify, and over than 3 millions with WordPress WooCommerce. What makes us different from what is existing? First of all, Recommend is first on the way of treating reviews. We're the only one that we making video reviews. And if we compare it with the expense for the marketplaces, we are more affordable. What makes us different also that it's easy to use, and we have integrated other features like machine learning and AI to, let's say, make another test on the reviews after publishing it. So it will be counter hate speech or nudity or other things like that. And of course, it gives better user experience. It's better watching than reading reviews. So for the demo, I will just try to show you how it looks like. This is an example for a marketplace where you can see your product here and the price. And this widget will be our product and what makes us different. So for example, if we're gonna watch these reviews, okay.
Live demo dilemma.
Yeah, that always have to happen. I don't know, wait a second.
It's okay, go back to your slides and finish because you're at 4:40 right now.
Okay. Well, finally, this is our pricing. We have a 4-bucket Business Pro Growth. Of course, they change with some features, and we give like a start free for a small or amateur of drop shipping purposes. And this will be more to make our name on the market. And totally, that's it. Okay. Our team are only 3. I am Ahmed. We are all like 3 engineers, but let's say I'm the hustler. We have Omar CTO as the geek, and we have also Bashir, which is the CEO, but as a hacker.
Okay, because he's not a hustler.
Sorry?
I'm just teasing you. I said because he's not a hustler. So you're about 5:30 without the demo, and I think yours will benefit by just from a script perspective tightening up. Like, because you're a little rambling on it, and I appreciate you doing it in English, by the way, for me.
Well, rambling because it gets ready only like 10 minutes ago, so we don't.
Dude, it's all good. Like, way to step up, and especially if you have to follow Steve. So design, I think, is okay. You could crispen up that. I think the dark slides versus the white slides is pretty contrasty. I'd rather see you pick one theme. Some of those, like that one's a little busy by comparison to the other ones are crisper. So I'd rather see you go that direction. This slide, the category shift doesn't really mean anything to me. So I'd rather have you, a couple things here, if you go generally for everybody's benefit, is use these as a prompt to help you remember what you're going to say, but don't read me the slides.
Sure.
Because you took time here to read me the slides, and it's like, you use it as a prompt to help you remember what you want to say, but I can read it faster than you can read it. The other thing is, when you come back to the very start, I'd rather you not be a tool, right? Because tools generally are like, they're small, right? So it plugs into somebody else's marketplace. And in your case, it is a plugin, and it does work with other commerce. But the fact is, you need to be on WooCommerce's marketplace. You need to be on Shopify's marketplace, et cetera. So I'd rather you say we're a product that plugs in we're a product that's a plug-in to existing e-commerce platforms and multiple e-commerce platforms. That sounds bigger than being a tool, right? So that'd be my suggestion at the very front end, because I think the context there is helpful. And then I think you just spend a little bit too much time before you get to your first problem solution slide, setting up the problem. So that would save you another 20 seconds of like, do the problem once, instead of right now it feels like you're doing the problem twice. Make sense?
Mhm.
But still 5:30 without the demo, and way to take on a live demo. When you do a demo, I would just honestly just do a screen capture, right, of the demo. And that way it's arrow, arrow, next, next, right? So this is the way our demo works. People come in, they hit the video, this happens here, this is what happens. And you're like, boom, boom, boom. But like switching apps, screens, internet risk, like just do a screen capture. And then if I have questions about it, I'll have you come back and do a long demo for me after the 5-minute pitch, because you'll get asked about it. You're like, hey, go show me the product, right? But that's coming out of their 8-10 minutes of Q&A, not your 5 minutes of pitching.
Mhm.
So it just limits your risk. Okay. Nicely done. Anybody else have feedback for Ekman?
I think there was something on the pricing. I don't know if I saw it wrong, but it looked like you had 0.300. Yeah, like it's American dollars, so you wouldn't have 0.199, right? You'd have
Yeah,
just 0.19.
move your decimal. Yeah, because otherwise it's 49 cents, 19.9 cents, and
You
39.9
can't have
cents.
200. Yeah, 200.
Yeah, so move the decimal behind the numbers. I did have one product in Cairo that by the time it converted to USD, it was like $1.47 a month, and I'm like, that's way too cheap. Like,
Oh, also on that same slide, I feel like instead of repeating the features in every single column, there has to be a way for you to put the features in one column and then just check mark, yeah, under each one.
yep.
So that there's just less text on the screen and visually you can just follow where the check marks are. The only one where you have kind of different text in all of them is the number of users. So you would just say like user in the column and then 1, 10 and unlimited.
And checks.
You have the email support, you would check that all the way throughout, for example.
I'm good feedback. I'm chuckling because when I ran Startup Weekend, we had a team based in Mexico City, and the team in Mexico would do this, right? When I agree with you, they would do this, and I was always like, "What are you doing?" He's like, "Oh, I'm in huge agreement." That was a great comment. Yes. So if you see me do this, that's I'm like, it's an old habit.
Yeah.
It's not an American habit. It's just a good one. It's like, yeah, I agree. Good feedback on that one. Okay. Hanar, are you next? Are you ready?
Yes, I am.
All right.
Hopefully it works. I don't know what's up with Zoom, but okay.
Let me take share away. All right. All right, and stop share. It's all you.
All right. All right, basic desktop, whatever this is, Adobe unknown share. It just next person. It's something's up with it. Next person.
All right. Ruby.
Sure, Ruby can go before I do.
Oh, thanks, Amy. All right, I can go next.
Go, Ruby. It's all you. Thanks for sending me the text. With as many people on the screen, I'm always trying to guess who's talking and waiting for your screen to highlight.
All right, just give me a second. Okay. All right, can you see it?
Yep.
Yes.
Go for it.
All right. All right, good afternoon, everyone. My name is Ruby Merchandani, and I'm the co-founder of Urento. So a huge discrepancy exists within the property management sector, such as no centralized channel for paying your rents, and landlords receive them as checks, bank transfers, and even cash. And for cash in particular, there are a lot of third parties involved, such as the watchman of your building or the security guard of the building. And there's often no tracking nor invoicing for both landlords and your tenants. So this is where we've come up with Urento. It's a cost-effective, multifunctional app that helps small to medium scale landlords manage their properties from a single platform. So basically, landlords save more time and money by collecting their rent every month and benefit from added features, such as if a tenant is way past due their rent, landlords can check that out, or landlords can adjust pre-uploaded contracts within the platform and have them directly sent to the tenants. They can set a date on when invoices are meant to be sent automatically, or even receipts and payments to be made. There's also the ability for landlords to respond directly to maintenance requests or tenant communication. So I'll give you a quick look on how your rental can work. So as a landlord, you'll be able to view your properties on a dashboard. You can then add a property by filling your details, invite your tenant by their email, and the property is ready. So on your tenant side, they receive the email address here. They can see the payments they want to make and then choose the type of payment, and that's it, they pay. So our market potential for our product is pretty huge. We've estimated that it's close to 500 million dinars in the GCC alone, and it promises a scalability into the rest of the MENA region. Our only competitor in this game is Ajar, which is a Kuwait-based platform. They've had tremendous improvement. I'm not gonna lie, I'll be honest about that. But we at Urento are confident that we can make it simpler, faster, and easier and cheaper. So this is what we're planning to do to make it a more secure app as well, more than Ajar is. How we make our money is pretty simple. So Urento offers a 3-month trial period with all the features for every new landlord that wants to come on board. And then we charge a membership fee depending on the type of property. So it's either 6 dinars a month per unit for residential or 8 dinars per month per unit for commercial. Our marketing strategy is pretty simple. It's a 3-fold kind of marketing strategy. So we plan to reach out directly to property developers and managers. We'll use LinkedIn and Instagram for visibility with our target audience, and also use networking events and trade shows to showcase our product in new markets. This is our team. We're a very multidisciplinary team, from marketing to lead design to operations and project management, and of course, tech development. So sorry, this is actually the wrong slide of the presentation.
No worries.
Yeah, just give me a second.
Forced you all into slide decks, so it's all good.
It's like 10 versions of them, so yeah, this is the one. Just 1 second. All right, I'm gonna share this one. Yeah, this is the one. Oops. There, I'll just move on to the last slide, yeah?
Okay. You still got a minute, so if you have more to go.
So our MVP is currently under development, and we project to be ready for launch by the 4th quarter of 2020. So we're just seeking seed capital to grow our team by hiring more tech gurus to continuously develop Urento. And using our first movers advantage, our plans are to enter new markets every year for the next 3 years. Just to conclude, Urento is very confident in filling the void for business digitization. So in a world where technology is everything, we've created a platform that can withstand a massive database of users. So it starts from Bahrain and then soars on onto the GCC and the entire MENA region. And it's pretty high time that we transition the property management sector into the tech era. Thanks. Sorry about the wrong slides also.
Oh, that's okay. You're still at 4:45, so you have time, and I think there's a few things I'd like you to slow down on your explanation of.
Okay.
So go back to your opening slides for me real quick.
So this is the new one. So I was going to show, I showed a very old one though.
That's okay. The new one's fine. So I guess my question here is, of these 3 problems you're solving, is that the order that because your first customer is really the landlord?
Correct.
Right. I mean, your user is the consumer, but your first customer is the landlord.
Right.
Are these ranked in the priority the landlord have told you?
Sorry, once again?
Is this the priority the landlords have told you is most important to them?
Rent is most important, yes.
Okay, so then get rent up there as number 1.
Okay.
Like the reason I say that is because when you blew through this, I'm like, it feels like you're giving me a bunch of features that don't feel like the most important feature. And sure enough, like, hey, landlords want to get paid, know that they're getting paid, know when they're getting paid, which means enabling new forms of payment and speeding up the payment process. I'm like, oh yeah, I believe you. But this is like, what Watchman feels like a completely tangential thing.
Yeah.
Right. So if it's,
because mostly how it's done is that rent is given in cash. So it's given to these watchmen or to these
No,
security
totally
guards.
understand. But I'm just saying is like to get into the program, you're like, again, that's tangential. Where what I really want to know is like, it's secure, it's fast, and I have good visibility to it as a landlord, because that's who you're selling, right? So if I'm the landlord and you come to rent one of my spaces, I'm going to be like, we use this app, period, right? That's because everything else, like, again, this is a little bit for everybody's benefit. Part of it is how you got here is not as interesting as your future. So all of us tell our founder history and kind of what motivated us, our why that we got here. And what the investor cares about is like, no, tell me about your future, right? The backstory is interesting, but it's secondary. So prioritize around that. At one point you said, I'm not going to lie, they're already in market. And then you showed me a slide that had every feature they have is in red and every feature you have is in green.
So basically we used to have features that were similar to them. So we were both all in green. And then I think that kind of didn't make much sense to me, I guess. So that's why we decided to put features that they
this one
didn't
doesn't make sense either, because it says either when I saw that and when I'm like, oh, you just changed your features, so you're launching a set of features they don't have, but they're not necessarily the most important features.
Okay.
Right. And then you took credibility away from yourself when you said, I'm not going to lie, they're already in market. And then you called yourself first mover towards the end of the deck. And I'm like, I have cognitive dissonance, right? So, and you don't, there's enough doubt with startups anyway. You don't need to add to my doubt, right?
Okay.
So
how do you suggest that we put this slide as like?
Yeah, I mean, if the most important thing is secure transactions from multiple bank accounts, you can, yes and yes, we both have that. What do we have that's different? Well, we have fast on or easy onboarding. We have a free trial. Like, show me the most important features and then tell me where you differentiate, rather than just like, I've listed 10 features that they don't have because they don't have them. And that's the way this slide currently looks. I'm like, I really care about the most important features.
All right. Cool.
And then how many landlords have you talked to?
We've spoken to just one property manager, which is Savills.
Okay.
So it's a huge building property management company. So they did explain like they do need some sort of an app like that would help them better manage, their tenants instead of them going to the tenants all the time.
Right. So I would get out between now and the 20th, get more data points. Like this is one that it feels like, yeah, the market's ready to do it. And I would probably, the way I would pitch it, I think, Ruby, would be, we have a chance to basically leapfrog a bunch of generations of technologies by enabling smartphones to do all of the payments that people are already doing today. Like peer-to-peer payments are everywhere. The landlord business has not jumped into the 21st century. We're going to jump them forward by a couple generations, right? That's the way I'd open my pitch. And then I'd go into like, this is the problem. There's cash happening today. What landlords really want is this. So we're giving them what they said they wanted, right? And then stack rank your 5 or 6 most important features, some of which are not competitive, some of which like they have secure payments. You have secure payments. It's kind of like that's table stakes. You have to have that to make it work. But then like multiple payment gateways, again, keep the landlord as the center of your story here. The thing that's most important to them from a feature standpoint. Okay. Anybody else with any comments for Ruby?
I just agree with what you said, Dave. So that makes perfect sense. Ruby, you need to go and speak to the landlords immediately and get their idea of what they need. We spoke about that earlier as well. So I know I think like from now until Sunday, you really need to go and get quite a few landlords. I think on the last slide, you also say something about the market, about reaching 3,000 customers. And you need to define that in terms of landlords rather than in terms of tenants.
No, they are in terms of landlords. Sorry, they're in terms of residential units, actually.
Okay. Okay.
Yeah.
Got it.
Great.
Yeah, I think one of the things where you have a lack of data there around, like, it's intuitive, landlords will want it, but to say we've talked to 20 landlords and they said that these are the most important features, you're like, oh yeah, just confirmed it, right? Kind of locked it in. So, all right, Hanar was next if you're ready.
Maybe
Yeah,
if
I'll
there
try
is
it one
something you
last
could
time.
look at. So
What's that?
just maybe there is something you could look at. There is an app called Egloz, EGLOOZ. It is also a platform for like property something, so it could help you to see how it works.
Cool. Thanks, Nabil.
Actually, Ruby, just going back to that, I recommended earlier Buildium. I don't know if you took a look at Buildium.
Yes, yes, the maintenance application. Yeah, we did.
Yeah, okay.
Thanks, Ali.
Thanks.
All right.
All right, ready when you are.
Hi, my name is Hannah Belushi, and I'm the founder of Tripod. The way people work is changing. For years, remote work has been an increasing trend. But as we've seen in 2020, the adoption rate for remote work has accelerated beyond expectation. Today, it has been proven that teams of people can work efficiently and successfully regardless of their location. Tripod is a marketplace platform for freelancers and clients to build teams or tribes, collaborate, and open their doors to different markets. It offers users a seamless experience from talent and project discovery to bidding, project management, execution, and delivery, all on platform.
Your slides aren't advancing.
They're
Still
not?
on Tripod.
Oh, sharing is paused because bring your share window to the front. What? Oh, technology.
That's okay. It goes with live demo. That's why you're
Maybe
doing.
you're referring to another slide. That's why. So maybe you need to.
I just see your opening slide is all I see.
Really? Okay, one
Yeah, that's all I see.
Aha, there we go.
All right, so that's what, okay, I'll just keep it with this.
Yep.
All right, I was, so did you guys see this or no? I'll just start from the beginning. All right,
Yep.
I'll just start from the beginning. Let me just put this over here. All right. All right. Hi, my name is Hannah Belushi, and I'm the founder of Tripod. The way people work is changing. For years, remote work has been an increasing trend. But as we've seen in 2020, the adoption rate for remote work has accelerated beyond expectation. Today, it has been proven that teams of people can work efficiently and successfully regardless of their location. Tripod is a marketplace platform for freelancers and clients to build teams or tribes, collaborate, and open their doors to different markets. It offers users a seamless experience from talent and project discovery to bidding, project management, execution, and delivery, all on platform. Around the world, businesses are pivoting their development strategies in order to adapt, transform, and thrive to keep up with a new normal of flexible work. So there's never been a more opportune time to launch, and we have a solid founding team with complementary skill sets to make Tripod a success. Here, you see a color-coded map detailing where freelancers are located in orange and the percentage of corporates hiring freelancers in blue. The key points are that over 70% of global freelancers look to online marketplaces to find work. And with only 9% of Middle Eastern clients utilizing such talent, we see this as a huge opportunity for the region. It is projected that the global gig economy will double in only 3 years. There is a cultural shift towards flexible work, a rise in cost of living, and an increase in digital adoption. Businesses are outsourcing to lower overhead costs, and there's a boom of on-demand remote services. Tripod offers solutions to current industry problems. Freelancers don't want to be restricted by their geographical location, and corporates want to have the best talent on hand, but slash their overhead costs. Essentially, Tripod gives users the opportunity to self-manage their tribes utilizing the platform's project management tools and become their own micro agency. Regionally, our most established competitor is Nebish, who has recently been acquired. Globally, it is Upwork, Fiverr, TopTal, and Freelancer.com, none of which have effectively penetrated the Middle Eastern market. Tripod's key differentiators are a focus on Middle East corporates during launch, the ability for all users to build teams no matter where they are in the world, and that freelancers earn 100% of project costs. Tripod is divided into 4 subscription tiers that offer diversified services. We are launching with an invite-only and referral strategy designed to onboard best-in-class talent regionally and internationally to attract clients, keeping a 3-to-1 ratio to ensure an adequate number of projects up for grabs. Initially, our platform monetizes from subscription and project fees. In the long term, from sponsorships, advertising, and partnerships. As the platform scales, we foresee pairing with industry leaders like Batelco, Emirates, and Bahrain FinTech Bay, who complement this new normal, as they've already launched products and services that benefit from the increase in remote work. We aim to scale from 3 perspectives: user incentives, client geographies, and target industries. So as Tripod grows, so do the opportunities. Thank you.
Okay, you're at about 3.5 minutes, so you have time to slow down and pace. So, so I think it feels like there's a couple topics that you revisit, and I want to get your narrative arc into a single arc instead of, it feels like you're like, and work is shifting, and then about 6 slides in, you're like, and work is shifting, and I'm like, we've already agreed to that. Like, the good news is with your pitch, you're like, well, work was shifting before COVID. Now it's really just blown up, right? Yeah. Everything, like, it's a whole new game, right? And everybody's going to go like, yep. Right. So like so when you come back and revisit it the second time, I'm like, okay, I'm already exhausted. Right. So I want you to just be like, so work was shifting before this craziness, and now this is just blown up, and our timing is great. Right. So, and then there's a couple of points where you're reading me the slides just because you're uncomfortable with it, but I want you to, you don't have to read me the slide, like tell me that story as you show me the demo. I like that is nice. That works well. But when you read me the slide and then show me the demo, I'm like, it feels redundant, and I think it buys you some more time. And the good news is people get what you're doing. It's not new. It's really new to your market, right? Your strategic partnership slide is just weird because there's too many logos on it. And unless you have existing relationships with those people, they're aspirational, right? So it doesn't mean much to me. So I'm like, I'd rather see you like, this is our go-to-market, and we have relationships with these people, and here's how we're going to do it. That would be more meaningful to me than a logo slide.
Would you prefer that we that we take that out, because we've done a survey, and we've received about 77 responses for it, and we've targeted corporates as well as like agencies, global ones, and just to see what their thoughts are. So should we put in that data instead of the strategic partnerships?
Yeah, I mean, Hanar, I think the real question as an investor, I want to know is like, I don't doubt that if you have the jobs, you can find the contractors. So what I'd really rather you double down on in that is, hey, we did the survey of the 77, here's what they said. Like, I want to know that ultimately, you know, somebody's going to come along and if you're successful at this, and they're going to buy you because you figured out how to do customer acquisition in MENA better than anybody else, right? And again, if the projects and jobs are there, people will come to you. So what I really want to know is like, how are you the best in the world? Like the platform itself is like, it's a marketplace. There's lots of marketplaces, right? It's already been done before. But I want to know, like, why are you the team to figure out how to acquire projects globally for talent in MENA to get paid a better wage, right? Or if it's like, are you acquiring projects in MENA? Are you acquiring projects in Europe? Are you acquiring like that slide of like, here's the orange and here's the blue, which by the way on my screen looks kind of red. It's not quite orange. I want to know, like, do you have unique insights to getting projects out of the US, or unique insights to getting projects out of Europe? Like, because that's really the highest lever you have is like, we know how to get projects from the highest paid, best projects out of the US to find talent in MENA because there's such a huge arbitrage opportunity. Like if that's the story, tell me that story. But what I want to know is like the marketplace itself isn't particularly, I mean, it's not insignificant, but the key driver in your business is, why do you think you'll get projects, more projects than Fiverr gets or more projects than Upwork gets, right? Because they already have a flywheel and market momentum. So tell me that go-to-market strategy, because that's most curious to me. So Ali, what else would you add? Welcome, by the way. I didn't say hi when you popped on, I should have.
Hi, Dave. Sorry. No, I mean, those comments are fine. They're great, actually. I actually have to hop off for a while, but Salah's on.
Oh, no worries.
So should I focus more on our key differentiator with our global competitors like the Upworks, the Fivers, and all them? So our key differentiator is the teams aspect, which Upwork is about to launch, but we're trying to do it before them. But whatever, they're Upwork at the end of the day, and I mean whatever. But so what the key differentiator with ours is that it's the teams aspect. It's that freelancers global freelancers earn 100% of their earnings, which they don't on any other platform. Where
I don't think that's the driver. Like ultimately, if you gave me better projects, I'll pay Upwork the 20% because the projects pay better.
Okay.
Right. So as a freelancer, I'm going to look at it and say, where ultimately do I make more money? And the answer is, I'm going to use all of them. So the fact that you give me a promise of 100% is like, that's only good if the project's paid the same and I get 100%, that's great. But if Upwork gives me a project that pays me higher rates, it doesn't matter. Right. So I really want to hear your focus on again, you have marketplaces I have sellers and I have buyers. Right. In your case, it's all about the projects and project flywheel and how do we get more projects. And then the fact that you pay 100% and you take a subscription instead, it makes me wonder about the economic model, number one, right? But you can answer that question later. But I'm like, show me that flywheel of the fact that we're getting projects, we're winning projects, we're getting exclusive projects. Like, so that way when the freelancer gets there, they're like, I won't go anywhere else because there's projects here and I'm busy. Like that's the narrative I want to hear you tell the story on. The other ones are they're like, yeah, okay. It was kind of like my previous slide about like, they have all red marks and we have all green marks. It's like not on the features that matter, right? So I want your feature who matters is how do you get more projects ultimately you're going to cater to contractors who are more here, well, here being your market versus my market, with people who have projects that are coming from my market. So if you have a thesis on how you're going to do that, tell that story.
Okay. Yeah, I'll focus on that. That's our 3-to-1 ratio and the invite only and referral. Yeah. Okay.
So right now that's pretty complex. I just want you to simplify it. So you're like, because all I'm trying to get to is like, do I believe they can do that thing? Like all the other stuff is like, they have to do that, right? But I believe you can find more projects. That's the story I want to hear you tell tomorrow. Okay.
Fantastic.
All right.
Thank you.
Zain Al-Sad.
Hi. I'll just share my screen.
Yep.
Okay, is my screen showing?
Yes, it is.
Okay, hi, my name is Zain. I'm the co-founder of Fowenhead, the food on demand service. My co-founders and I were facing a problem where we had a surprising empty fuel tank in the middle of the road. Therefore, we decided to create a survey to know if the problem is also diverse in Bahrain or not. We've done the survey and we've reached 13,400 responses in just 5 days. And our demographics most of them were employees and students. So the problem we've initiated was the empty fuel tank in the middle of the road, the congested fuel stations at once, shortage of time. So our solution was establishing one platform being handy and mobile for the empty fuel tank problem. And we decided to create one vehicle to solve the problem of congested fuel stations at once. So instead of 10 cars going to one single fuel station, one truck gets to fill 10 cars at once. And we've also found out a solution for the shortage of time for people to invest their time in doing something else rather than getting their fuel tanks. So our market size is, in Bahrain, we have 560,000 vehicles. And in the GCC, we have 22 million vehicles, which gives up to $20 million in 1 year in Bahrain and $80 billion in GCC annually. So where are our advantages? Our advantages are that we're the first in the kingdom and the second in the GCC. We have unlimited usage, which is 24-hour platform. We are personal and gamified and bilingual, and as well as integrating the API integration. So this is how we make money. We have a diverse way of making money. We have the freemium packages done for the regular users and subscription bundles, having the basic, standard, and premium. And while using the Sadim card package, we have a basic, standard, and premium with a 21% discount, as well as gaining an annual subscription fee from merchants like Sadim and car wash services to be implemented, and getting 45% from the logistics service charge. And not to mention the contracts that we're building with businesses. Depending on each business, we have different pricing. Why is it the time to implement this service? At the end of the survey, we have initiated a question: do you think fuel on demand is a good step to be done in Bahrain? 75% of the respondents answered that is yes. And the respondents who answered no was because they thought it wouldn't be safe and it wouldn't be convenient to be used. Our target, meanwhile, we have two hypotheses. Hypothesis one is aiming 6,000 users, 5 companies, and 2,000 users for the Sadim card. The second hypothesis is gaining 15,000 users, 10 companies, and 5 Sadim card usage. In 2022, we are planning to move out to the GCC. Our ask is to implement 35% of the team growth, 25% in business development, and 25% product, 15% in marketing, and in a total of 100. And this is our team. I'm Zain, the CEO. We have the CTO, Mohammed Al-Qasimi, and Sarah Fakhri, the COO. If I still have time, I can play a video on how the process can be done.
You have time, but I'm not sure that it is it a demo of the mobile app, or what's the demo of?
Yeah, it's a 1-minute video explaining how the app can be used and the concept of the application.
Yeah, I actually don't think that it adds to your story, right? I mean, I think people have used apps enough at this point. By the way, you're at 3:42, so you can take some time and breathe, because you're cranking through it. Like so take some time and breathe. The good news about, like, the reason I say I don't think it adds any value to show the app is that people are like, oh, I know an app, I know how to get fuel. Like it doesn't necessarily change anything. But design-wise, yours is one that can use some design help and improvements to making cleaner and crisper. Like I'd want the design of your slide to reflect the design of your mobile app, and it should be crisp and clean and easy to use. So think about that from a design perspective and tie those two pieces together by the 20th. So if you're just doing wireframes on the app, then think about how do you apply the design to the app too. So those two pieces should come together. So I liked the data on your surveys, but then I was confused by it because you said there was a lot of students involved, right? On your
Yes.
So tell me.
The highest.
So employees and students. So you surveyed a really, really big group. That's great, but it doesn't feel like who your customer is. So like students.
It was a nice survey. I just applied 2 of them. I didn't want it to be long, but I can show you the survey if you wanted to know more specified questions.
No, I guess I'm more curious, like this, when I think about who I thought your customer was going to be from the way you started the pitch, I thought you were going to be, we service fleets and we service businesses, and then we service consumers, like kind of down that order because they pay the most. Right? But then I saw your slide and you've got like students, and I'm like, how many students have cars that need to get, like, students have time to wait in line versus I don't have time to wait in line. So the data doesn't sync with where I thought your narrative was going to go. So what I'd rather have you tell me the story of, I think, because my guess is you're going to go B2B first and B2C next, right? And then where the story kind of falls apart is that B2B story arc, you introduced this concept of students, and I'm like, now I'm thinking about how do students use this? And then you've moved on to the next slide, and now I'm trying to catch up to where you are, right? And then you get to your pricing one, and you've got a whole bunch of features, some of which are aspirational, like we're going to do car washes, right? And I'm like, I don't know that the business cares, right? So you've blended together the stuff that's going to happen at launch with the stuff that's aspirational. I'd rather you, on the narrative track that I'm after for you to be successful to get in the program, is like, listen, if we penetrate the market for B2B, filling up fleets, and then consumers have super high demand and they'll pay us a subscription, we'll go do it. But in the meantime, like, you can make a ton of money filling up the fleets, right? Because you're in a capital intensive business, because you have to buy the fuel trucks, right? Or lease the fuel trucks. So are you already in that business?
We're partnering with the logistics company, Minuan, to provide the tankers and the trucks.
Okay, so that's something you need to include, like, how are you going to do it? Because otherwise, I don't know how much a tanker truck costs, but my guess is it's not cheap.
Yeah.
Right. So, so yeah, there's a few things I just want you to think about your prioritization of. My guess is it's B2B first, and you know, consumers that have discretionary income, that time is more valuable than waiting in line. If that's true, then I would get rid of this slide and talk about, we did a super broad survey, but here's what it told us about B2B, and here's what it told us about people who, you know, had money versus, you know, my 18-year-old can go wait in line to get petrol, right? But if you said, hey, Dave, we're going to charge you $5 for every fill up, or $29 a month for a subscription, and we'll come fill it up for you, and the gas is going to be more expensive than the gas is at the pump, I'd be like, okay, right? But my 18-year-old, he can go, he has time, right? So that's where the asynchronous thing is. And then when you get to the pricing slide, what I want you to focus in on is what's your launch price, right? What's the thing? Is it, because this one's,
we're charging,
like, you've thrown the entire menu at me of all of my pricing options, right? And what I really want is, like, what's the number one pricing option?
We're charging a small top-up service fee, which is 900 fils per fill-up. But we have the basic and standard and premium package monthly. We charge 4 BD monthly for the basic package, unlimited fill-ups, but with a certain amount of fill-up, 8 BD standard, and the 11, which comes up to, like, the 4 BDs 1 to 2 car fills, the 8 BDs from 1 to 4 car fills, and then the 11 is from 1 to 6.
So I would probably rename that your standard package, only show that one, because then when you start, because when you add complexity here, I just get lost, right? And I'm generally pretty good about following along, but between your pace of moving along and there's so much on the screen here, I'm just kind of lost by it, right? So I'd rather have you, from a clarity perspective, it's more important that you answer the question and have them ask questions than that they get confused, right? And then go back to your target market, or your market sizing slide for me. So is $20 million the fee on the 560,000 vehicles, or is $20 million the top off fee? Like, what's 20 million of the 560?
All right, the 560,000 vehicles are times the annual revenue.
Got it. So, but not everybody is your target market, right? Of the 560,000?
Yes.
So again, what I want you to do is say, of those, the number of commercial vehicles represent, because it's more important that I'm more interested in your target market here than the total market. Because not everybody's going to use your service. So tell me, the slider here is a smaller target market and a higher price per car makes tons of sense because people value their time. But the people who have time to wait in line will never use your service. So that's where this one's a little confusing. And I'd rather have you be more accurate about, like, of the total vehicles in the kingdom, how many, you know, we think 15% would pay a premium, and that premium on an annual basis is worth X, which gets us to $20 million. I'm like, oh yeah, I kind of believe that that's the total addressable market. Sure. right? But if you say everybody could use it, the answer is now I don't believe you, right? So just know that that's kind of the reaction. Anybody else with feedback for Zane?
Yeah, I was really engaged. I think your delivery and the last person's delivery, you just want to listen, and so I think that's quite key. So I enjoyed it.
Thank you so much.
Zain, I'm gonna send, just gonna look up the Instagram account I found a while back, because I have someone else has came up to me with a similar idea, but I found the same concept in India. So I'm just gonna share the account with you. Maybe you can go through their process or connect with them to see what they're doing as well. So it could add value.
All right, that would be great. Thank you. Thank you so much.
Yeah.
Awesome. All right, let's see. Somebody else had texted me earlier. Let me go back to that. Hold on a sec. I think, who was it? Mohammed? You
yeah, Dave.
Chat about going next? Go for it.
Yeah.
Yep. And then Nora, you can go after that.
Okay, sure.
Can I share my screen?
Yep, hit the share button down there on the bottom.
Still on sharing.
Sorry, there you go. Try that one.
Okay.
I hit stop share on mine.
Okay. Okay, it's just a rough presentation. It's going to be quick because I'm a big believer of that. Complexity is the enemy of execution. So I tried to make it simple.
True. Less
and this
more presenting.
Yeah, and this is the whole point of our application. It's more fun, and because it's targeting at the end, it's a marketplace and targeting like end consumers. So they're going to be putting their content, so it has to be fun and light. So the app, we're still not decided 100% on the app name. Just to understand why this is the charisma that this is created is the guy who trades stuff in the Gulf, which is called Zari Atij. This person, which is the mascot that we have created after the social media. The application and the platform is going to be called Let's Swap, where your item swap come true. Sorry, hang on just a second. Quick overview. Let's Swap by Zari is to be the first marketplace platform that's specialized only in bartering and exchanging commodities. So currently we don't have this culture, unfortunately, in the Gulf of exchanging items, and it's only buying and selling. So Let's Swap is going to be the ideal place for you to exchange your item. The design is going to be very simple, easy and fun to use. You just post any item you have that you're not using for a while. Someone else puts his item and you guys match. It's like a Tinder, but for your communities, basically. This is a real example that we are currently doing on social media. For example, this guy, he had a Casio Pro Trick, which is a very unique watch. He wanted to exchange it with an Apple Watch. So a guy had an Apple Watch and this guy has the Casio. The swap happened. So this is a real example, and we're targeting mainly Arabic now because it's in Bahrain. We are starting in Bahrain and Gulf, but we have a version of English post as well. So we're targeting both of Arabic and English speakers. So the problem that we are solving, that we're living in a very fast-paced age that turning us to a hyper-consumers, which we just buy stuff and we do not use. Like the example you gave about the juicer that it costs like $400 where you put your juice and then it squeezes it. I reckon like 70% of whoever bought this item, it's been stacked at his kitchen and he's not using it. So instead of throwing it aside and piling it up, the solution by Let's Swap is just to make it easier for you to get rid of your unwanted item while getting an item you need without spending money. Because we did a small survey and it showed that 80% of our followers that they use our social media, 80% of them, they buy something and they don't use it over a year. They just put it there and it's just there, and it depreciates in cost. If you're gonna sell something used, the cost is gonna go low. So the best solution is just to exchange it. Our market size, currently we're operating in Bahrain. We grabbed the traction of 6,000 active followers on our social media in less than 3 months. We've done 60 successful swaps, and the target is mainly the GCC and the MENA. The target is to introduce the trend of bartering to the region, basically. So it's going to be more of creating a trend rather than just an application out there. So we're estimating about over 10,000 active users by the end of 2020, which they are going to be on our social media platform. Then when we're going to introduce Let's Swap, they're going to be a percentage going to be diverted to our real customers on the app. Competitive analysis is just a quick draft. Our main competitor in the region is Dobizel and Olex, which Dobizel has acquired Olex, and they are operating in 45 countries in the region. But our competitive advantage that we are a local team and we are speaking the language of the locals. So we understand the formula and the branding and the language that it will appeal more to the common households. The second competitive advantage is that we are narrowing the type of transactions to bartering instead of buying and selling. And the more users that we're going to get, we will be introducing the cash-aided transactions. Traction and timing. As we know, since the pandemic happened, consumer priorities are changing. Instead of spending money, it would make more sense for you to exchange your item. If you want an item A and someone has an item B, it's easier for you to exchange it. And on our platform, we verify all the requests. So there's no like fake pictures. We check the user's account. We have their contact details. We make sure that the item that you're going to get is 100% genuine and in excellent condition. In less than 45 days, we were able to get over the 100 swap requests on our social media, which I mentioned that we had 60 successful exchanges ranging from electronics, household items, and personal use items. And it's an ongoing process currently. The product roadmap, we are currently present only on Instagram and Facebook, and we are gathering the consumer feedback from our followers to understand better what's required. And we're doing like a weekly Q&A. Yeah.
Well, Ahmed, you're at six and a half minutes. So you started with fun and succinct, but there's lots of rambling in the middle. So okay. Your basic structure is coming together. A couple of things I would challenge you to take.
Because I have just, I have like, yeah.
Too many.
I have like three slides.
There's lots of words on the slides and you're reading them to us. You know what you want to say. So like, get rid of the words on this. This is your basic structure is fine. You're at 6.5 minutes. So a couple things that I want to get to some core assumptions. One is I'd rather you pick Let's Swap or Zara as the name and stick with one or the other, because it's hard to do both, right? So decide which one you want to stick with, because it's just from an expense standpoint, it's going to be hard to do both. You say the problem we're solving. I don't actually think you're solving a problem. I think you're just letting people have fun.
It's fun, and to be honest, I watched this is what I told Ali and Sarah as well. I watched a documentary called The Minimalism, which I highly recommend. And since the COVID-19, everyone started like cleaning up their spaces, and you will be amazed. you will be amazed with the stuff that you have and you are not using. So this
Oh,
was
yeah. I moved recently. The answer is I'm not amazed at all. I've moved it too many times. So, but I don't think it's a problem necessarily. Like exchanging stuff for stuff isn't answering my minimalist need. Right?
No, the problem that I'm referring to is that when you are like cleaning up, or let's say moving out of a place, or you want to just to clean your space, you will have a problem of getting rid of your stuff. So what are you going to do with it if no one's going to buy it? It's the perfect place just to put it on there and exchange it with an item that you might need.
Yeah, my only point is I think you're over engineering a problem.
Maybe,
right?
Yeah.
So where I would say I would say like people have stuff they want to get rid of. They don't necessarily want to sell it because it's not worth the money, and they may not want to give it away because they still think it's valuable. We just give them a fun way to trade it. Like so I would test that messaging, because at the core of it, like Steve's problem is a problem, right? Like it's antiquated, it's old, it's a problem, and I need cash faster. Your problem is more of a, listen, people they don't want to give it away, right, to a charity, and they don't want to sell it because they're not going to make enough money. But if I gave them a fun way to trade it, I think they'll do it, right? But again, I just don't. I think you're trying to fit into the problem solution scenario, and I think yours is just going to be more fun. Just a thought. So
I agree.
You have 6,000 active users, but you really just have 6,000 followers on social, or do you have 6,000 people like? Okay, so followers and active users are different. Active users have a frequency involved. Are they active users daily, monthly, weekly, right? By active users, my definition would be people who are either looking to trade something or posting to trade something.
Yeah.
So, but having 6,000 followers is great. Is it a social media group?
No, it's on Instagram and Facebook, and it was it grew organically. We didn't advertise, we didn't do any marketing.
I'm just saying your language is, we have 6,000 followers on Instagram.
Yeah.
And of those active, how many either post or search for something on a monthly basis? Those represent your active users.
Yeah, we're getting like around like on average of 4 to 7 requests to post their items on social media.
That equals then on a monthly basis, the 100, 200 active users, right? Which gives you a percentage, right?
Exactly.
So the good news is you're acquiring followers super cheap or free.
Yeah.
But the number of active users isn't 6,000. The number of active users is people who post or people who trade. So your language around how many active users we have is just that.
Okay.
Right. So we have so many followers on an active user basis. It's 3%, 2%, 5%, right? So the big question then becomes, how do you keep getting followers? That's goodness. And then how do you increase the percentage of active users based on, right, what you're promoting and what product is there, right?
Sure.
So just correcting some language there. On all of your slides, generally speaking, just fewer words. What I'm after is 4 bullet points on a slide, maximum, 4 words per bullet point. This one has lots of words. Small novel, maybe a pamphlet, right?
Okay. So, yeah, this was just done like in an hour. So I just
want you to, the next version of it is 4 bullets per slide, 4 words per bullet, right?
Sure.
So the easier to exchange in the fun context, I believe. Your 100% genuine thing, I question. So we're like, we're going to ensure that you get 100% genuine product. I think that at scale, you can't do that. Like there's companies out that do this, like then they sell like Coach bags and, you know, things that are
right.
For you, what you're going to do is you're going to likely, I'm projecting here, but I think it's an educated guess, right? You're going to create a peer-to-peer ranking. And if Dave trades something that's a piece of junk, Dave's going to get blacklisted.
Exactly. Yeah.
But your ability to verify that it's really the product isn't going to scale.
Okay. Yeah. And we're going to have a back-end verification like what we're doing now. If you send me like a picture from the internet, I'll be like, no, you have to send me a clear picture with a white background showing the whole product. So we make sure that it's 100% in excellent condition.
Yeah, I think you can generally give guidance that direction, but what I wouldn't say in your pitch is it's 100% genuine product, 100% quality product. The answer is we have tools in place to make sure that it accurately represents what people are trading. But if it was a fake Rolex, the answer is unless you guys are to certify it, you don't. The 100% thing is what I want you to stay away from.
Okay.
Right. We're gonna do like if Dave trades Steve a Rolex for an Apple Watch and it's a fake Rolex, like we're gonna kick Dave off. Right.
Yeah.
Steve's gonna score him low because at scale, you can't guarantee that. All you can guarantee at scale is that hey, the people you traded with are going to be able to rank you. And if you rank poorly, the answer is you're off the system, right?
Okay.
So again, I'm narrowing your feature set because right now there's a bunch of aspirational things in there. And all of us as founders live that way, right? We see the future as if it exists and then we talk about it as if it's actual.
Yeah.
But that causes a credibility gap, right? Because people are like, oh, you have 4,000 active users a monthly? And you're like, well, no, we have 4,000 followers. And then all of a sudden people are like, oh, okay, well, that's not really the case, right? But then again, it's what we as founders do. It's part of our delusion, okay? All right, let's see. Nora?
Dave.
Yes, Steve.
Yes, yesterday you said about Mohammed's thing. It was really good where, like in England, we have a website called FreeCycle. If I don't want my sofa, I put it on there, someone takes it away. It's a bit like my platform. I can do bonds, cash, bonds, cash equities. If Mohammed can do something like collateral, product, that's one thing he's doing. And then product cash, that's another thing. And then product free, because a lot of people are moving countries, house. They haven't got time for this. Who wants to pick up my sofa? Just take it. And so if you can do like different methods of exchange, I think that you can add that as different features. I think that'd be really good because in England, FreeCycle. If someone's moving in, they need a sofa, got no money, you can just pick up someone's like brand new sofa. And so I think that's a good thing for you to look at.
I think, Mohammed, going back to my comments from yesterday, I double down on Steve's comment there is I think I'm going to let the customer buy however they want to buy. Like if you have something and you want to, like we moved recently, I have a piano. Like if you come and pick it up, just come and pick it up. Like I don't want anybody else's stuff. I don't want a cabinet. I don't want a bookcase, right? So, or if you had a piano and I was willing to pay for it, I'd be like, oh my gosh, I'm looking for that one thing. I would pay for it. So I think limiting how your customers transact, keep the hook from a marketing perspective of barter. But I think if you open up the FreeCycle, if you open up it's okay to pay, then your total addressable market like quadruples, right? Then it becomes like, oh, this could really be a big idea versus like, oh, it's super niche. Barter's cool, but it's kind of niche. So I think from an investor perspective, I'm like, take the niche hook, but expand it to however the customer wants to, like, if somebody wants to give something away, cool. Like, we're not going to stop them, right? You're like, as long as my 4,000 becomes 40,000, do you care? Mm-hmm. Not really, right? So so consider that, right? I'm not going to tell you what to do with your business, but two data points, right? All right, Nora.
Thank you. Can I just say one thing to Mohammed as well? The name Zari Atij is much more interesting as more colloquial and speaks to your target audience that you're differentiating yourself with, right? That you're more local, right. And it's a really nice creative name than Let's Swap. So I quickly understand.
Yeah, it's targeted for Bahrain and GCC region. But when it comes to an app, it has to be. We're still rethinking, of how to go about it. But yeah.
All right, Nora, you're up.
Okay.
And then Rashid, you're up after that.
Okay, share screen. You see my screen?
Yep.
Okay, so I haven't practiced the pitch or whatever. I'm just going to go through it. I just want to get a feel for the slides.
Yep, go for it.
Okay. So Hi everyone, my name is Nora and I'm a US licensed clinical nutritionist and the CEO and founder of NutriBox, your pocket nutritionist. How many of you have tried to lose weight but find it very hard to do so? The year goes by and you're piling on the pounds and you feel lethargic and you feel down on yourself, but you just don't have time to visit a nutritionist. 54 million millennials in the region are overweight. They have the same problems that you do as millennials. On average, a millennial spends $4,000 per year trying to lose weight on nutritionist visits without follow-through diet plans and weight loss products. This translates to a $216 billion market in the region, in the MENA region. Sorry, just because I can't see my, 1 second. Can you still see my screen?
Disappeared. Oh, now it's back.
Like this. Okay. This translates to a $62 billion GCC market, which we're targeting as our first strategy. NutriBox works with customers like yourself from around the region to help them lose weight, build healthier habits, and develop a healthier relationship with yourself. We combine a human element along with machine learning for weight loss that lasts, personalized to you and backed by science. We're currently changing lives at 6,000 registered users. We're on the App Store and Google Play. And our business model is that we're combined revenue. We have a combined revenue stream, transactional and subscription based. Our average percentage per transaction is 30-35%. Our average ticket size as a subscription is about $250. Our first target market is the GCC millennials, which are at a 15.5 million population. To be precise, overweight GCC millennials. We currently have 6,000 registered users from across the region. We're border agnostic. We have changed 650 lives, and we have 37 multi-specialty nutritionists from around the world. We're a small but mighty team. I'm the CEO and founder, so I know the market like the back of my hand, and I have a huge passion in the problem that I'm solving. We have our head of operations who has experience in this field as well, our tech lead, our community happiness officer, and our behavioral scientist with us on board. In the next 9 months, we aim to acquire 1,000 customers in the first quarter, and the second quarter moving on to roll out different features, growth marketing, and anchor partnerships in Bahrain. And in the third quarter, we plan to enter the Saudi market, where a lot of our current customers are from and based, and we aim to dominate Riyadh, Jeddah, and Khabar. So we're raising $500,000 as a seed round. The majority of the capital will be used for growth marketing, technology, and hiring key operational talent. So, and then those are just extra slides of projections, some of our NutriBox heroes, so their stories, the impact we've had on people's lives. That's just a few testimonials, and that's it. Thank you. So I know this is very rough and a very,
So I'm going to flip your narrative a little bit here. I want you to tell a hero stories as the story arc, right? Because it really is, you have examples of changed life, you have users, you have some registered users, and right now it feels too abstract, and your hero story happens at the very end. So I'd rather be your smartphone nutritionist versus your pocket nutritionist. Like I know you're still playing with those ones, and that's fine. And this looks very kid-ish logo and child-ish logo, where it's like, I would tend not to take it seriously, right? Okay. Where if you're really like, so from a design perspective, the colors are bright, it feels kind of whimsical, right? Versus like, oh, we're actually the ones who are going to help you lose weight. Like, that's what we're going to do. Like, I'd like you to be like, the narrative there, I think it feels disconnected, right? Okay. So, and how many, so are you starting with subscription? Or are you starting with transaction, and is your transaction fee a referral fee?
No, right now, so our model was a bit different, and then we found, that's why I was asking, like the product market fit, where we know which will be our primary revenue source and what's the biggest driver of revenue that's more lucrative, right? So it's subscription based, and then you have transactions with your nutrition